Hi guys, Joshua here and welcome back to my YouTube channel. In this video we're going to run through the potential tax increases that are on their way as a result of the government needing to make up the massive deficit we find ourselves in now as a result of the coronavirus. But before we get started, please do just hit the subscribe button below so that I know you guys are enjoying this and that people are watching, and most importantly so you don't miss out on any new videos that come out. So thanks for tuning in. So essentially, as a result of all of the increased borrowing that the government have found themselves in, estimates say we're in £40 billion shortfall, and some estimates put this as high as £60 billion that needs to be raised through increased taxes and further government cuts. Rishi Sunak, they announced that they are looking to overhaul the capital gains tax system. So this is the system that applies when you sell a capital asset. So for most people this might be houses, commercial property, land, stocks and shares. All of these are taxed under the capital gains tax system, which is separate from income tax and is most likely taxed at a lower rate than income tax typically. Now, they announced a number of areas that they are looking at and potentially changing around the capital gains tax areas. One of these was the primary residence relief being available. So, principal primary residence relief, what that is when you sell your main residence, so a house that you've lived in, there's no tax to pay as a result of you living there. So your primary residence should have one house and you can sell that completely tax-free, which is great for people who kind of keep buying houses. They might sell one, buy another one, add value potentially if it's your main residence, and do this completely tax-free. The government announced they are reviewing this and potentially looking at maybe scrapping it altogether. It's very early days at the moment, but if you are looking at potentially selling your house, now's the time to review it just to make sure that you are where you need to be. Secondly, they're looking at potentially scrapping the capital gains tax annual exempt amount altogether. So for this year I think it's £12,300, which means that you can sell your assets. If you sell a second property, the capital gain you've got, you'll take off your annual allowance, which is an allowance where you pay no tax on. Anything after this is taxable. So they're looking at potentially scrapping this altogether, which for a lot of people could cost them anywhere between £2,000 and a potential up to £4,000 in extra capital gains tax when it comes to selling their asset. Other potential changes include increasing the rates of capital gains tax that apply. So currently there are, I think it's 5 rates of capital gains tax that apply. The most common that you'll come across are the 10 and 20% rates, which apply to standard disposals, or standard capital gains disposals, but not including residential property. And then you've got the 18 and 28% rates that apply to residential property disposals. Previously, up until a couple of years ago, all of the rates were kind of unanimous in that you'd have 10% and 20%, but what the government did in a bid to increase the tax take from landlords was that they increased the capital gains tax rate that applies to residential property disposals up from 10% to 18% for those that fall in your basic rate band, and 20% to 28% for those that fall in excess of your higher rate band. They're looking at reviewing this and making it so it's a unanimous rate again, in that rather than it being 10%, all disposals will now be 18%, and rather than it being 20%, all disposals will now be 28%. It's important to mention that a lot of this at the moment is very early stages. So nobody knows what's going to happen, probably not even Rishi Sunak himself. It's very early stages, they are reviewing that and they will go through many consultations before anything gets finalised. However, now is the time to take action. So if you've got properties that you are looking at potentially exiting from, if you've got a house that you're looking to sell, any other capital assets, now really does highlight it as a fantastic opportunity to get your situation reviewed and make sure that you're in the best possible position should any of these changes actually come to light. So this was just a quick summary running through the potential changes that may be on their way and making sure that you guys are aware so that you know what to do now and make sure that you don't get caught out by this. You know, a lot of people back in 2015, they were the early adopters to the Section 24 side of things, so they were able to move fast, and as a result they're not paying more tax now. So don't leave it to the last minute. Make sure that you get all of your ducks in a row and make sure that you're as prepared as you can be. If you'd like me to post more capital gains tax related videos, drop them in the comments, give this video a thumbs up so that I know capital gains tax is something that you guys want to know about. Otherwise, that's all from me, but please, if you found this video useful, please do like, comment, and most importantly, subscribe, so I know you guys are enjoying it, and I know to keep on doing it. That's all from me, folks. Bye.